to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Mr. Tamal Bandyopadhyay, veteran business banking journalist, joining in. Welcome to the show, Tamal, and always a pleasure to speak to you and get insights from you. Tamal, everyone's talking of a golden period for the banking space from here on.
Well, last year, that's fiscal 2022, we had the best results, barring one private bank. Each and every bank have been in the black profit, and that's a record profit. Interest rate is going up now. That's a separate story. I'm talking about the year ending March 31st. The major problem of the Indian banking system, which had been in the past few years, is the bad loans. So if you look at 31st March bank balance sheets, for most banks, or if not all banks, the bad loans have come down. New accretion, or technically the fresh slippages, have come down. And also, most of the bad loan has been provided for. If you see the so-called provision coverage ratio, it's pretty high for the entire banking sector. And most importantly, all banks are well capitalized. And I'll end this round with also referring to Reserve Bank of India's that half-yearly annual health checkup, that FSR report, which came in June, which talks about in the worst kind of scenario, banks would not need fresh capital. And it also talks about the quality of assets. Of course, it has given a guidance or projection which assets will sleep, will not remain where they are in terms of bad loans. But one interesting part is that among the restructured loan is very limited. If I remember correctly, I think in the MSME segment and retail segment, it talks about 2.5% each of the restructured loan. So if you look at the entire banking system, restructured loan is far lower than what we had anticipated. Kamath committee recommended 26 sectors restructuring where the banks could restructure. But in reality is this, I think the banks have done well during the COVID period. So that's the positive part. Now, is it a golden period? How long will it continue? I think we need to wait and watch because it's a cycle. So I would like to believe the bad cycle got over. And we have to give Reserve Bank of India credit for that. The asset quality review, which was kicked off by the Guram Rajan, and his successor took it forward with a pretty strict Reserve Bank of India. I think banks are now better off in terms of their asset quality, in terms of in risk management, as well as credit underwriting. It's all far better than what it was 5 years back.
Right. So overall, with all of this said and done, how are you envisioning the credit growth? Because everyone's talking of a double-digit credit growth. Yes, there is a lower base as well. What's your anticipation?
As we speak, I think till the 1st of July, year-on-year credit growth is 14% plus 14.5%, if I'm not mistaken. Deposit growth is in single digit, but credit growth has gone ahead. And this we have not seen in the past few years. So indeed, credit, and there are many fence-sitters among the corporations who are willing to take credit and giving the finishing touches to their projects, etc. I think particularly in the road sectors, banks have been disbursing money, in green energy disbursing money. Thanks to the lower interest rate till now, there was credit growth in the retail segment as well. So overall, I think the bad patch that we had seen in the past few years, it's gone. Whether it will reach 20%, I don't know, but definitely it will be in double digit and higher double digit. That's the kind of trend. Of course, we are in a very uncertain world. COVID is still not, we have not yet seen the end of it. In different format, it's coming up. I hope the worst is over. We also don't know as we speak what's the future of the war, the Russia-Ukraine war. We don't know, even though the oil is now less than 100, but whether it will continue. So there are a lot of uncertainties there. But overall, I think the bad phase is over, and we will see higher credit growth. One point I forgot to mention about this, the challenge before the banks at this point of time, when you say that golden era is this, the sudden spike in the interest rates, and which is why you will see in the particularly for the first quarter of the current fiscal year 2023, many of the banks will, or rather most of the banks will make treasury losses. You know, and there was a representation by the banking system to Reserve Bank of India that Reserve Bank of India should come out with some kind of window to help them out. One way of course, raising the limit of HTM category of bonds where you don't need to mark to market, where you're not subject to mark to market losses. And second is indeed, if you are you need to take the mark to market losses, spread it over a period of time. But my understanding is the Reserve Bank of India is not comfortable with this, giving this dispensation, because RBI feels that banks are adequately capitalized, even if they have the ability to take the hit. So I get there are various numbers going around. It could be between 12,000 crore and 15,000 crore mark to market losses for this quarter. Public sector banks will be more hit than the private banks and foreign banks, because those banks are more into trading, where the public sector banks definitely is more into buying and keeping them. But I would like to believe that from now on, this hit is because 90 basis point hike in one quarter, which was quite sudden. So from now on, yes, the interest rate will hike, but will rise. But that will be gradual, and banks are prepared for that. So banks were caught unawares in the first round of hike, which happened off cycle. So between the two, it was 90 basis point hike. It's difficult to stomach, but again, as I said, the systemic stability and strength and resilience good enough to take care of the losses.
Right. So what's the kind of additional hike are you looking at from the RBI over the next couple of months?
Well, 4.9 at this point of time, we need to wait and watch the US Federal Reserve. By the end of this month, there will be another rate hike. We were talking about, like analysts were talking 100 basis point, but now I think they're settling for 75 basis point, most of them. In the past 1 week, we have seen Bank of Canada and others hike. So we can't afford to lag behind. We need to hike the rate. One is to tackle inflation, and second, of course, on the rupee depreciation. Because if the interest rate differential, it widens, so certainly there is no incentive for foreigners to put in money in India. So RBI needs to now. I would like to believe there's a 50 basis point hike in August, and it will be followed by, depending on the inflation scenario, and even though inflation on the food side, we are seeing, things are getting better and easier, but the core inflation is still quite firm and entrenched. So we can't afford to let our guards down. So from 4.9, I would like to believe 50 basis point now, and then moving ahead, probably by March end, March, April, I would not be surprised if it goes to even 6%. That's the
right.
That's the kind of interest rate scenario I would like to believe.
Right. And Tamal, overall, if you see in terms of where the asset quality of the banks goes, how are you seeing that trending from here on?
No, we are much better off. As I said, we had anticipated far worse scenario because of COVID, but banks have tackled it well. So fresh accretion of bad assets are less, and most banks, as I said, the provision coverage issue is pretty high, and they have adequate capital. And as the credit grows in percentage term, is plain arithmetic. You will find the percent of NPAs will be less than what it would have been otherwise had there been no credit growth, because it's a percentage of the credit, right? So from now on, yes, there will be some impact, but I would not see that we see a repeat of what we had seen in 2014-15. Having said that, I would like to point out one thing. I think this COVID actually is now separated men from boys from the Indian bank in the Indian banking sector. If you look at from a depositor's point of view, all banks are safe. No bank will be allowed to fail. That's the Reserve Bank of India policy. If there's any chinks in the armor of any bank, RBI sends it, and probably sometimes you see it takes little longer than what it should have been. You say, but RBI does its homework and it's always keeping a tab what's happening there. So our money is safe. But from the investor's point of view, you will see, I'll not name, but there are only probably half a dozen bank or less than half a dozen bank, maybe 5 banks exist in the universe. Some of the banks which were promising even 2 years back, they are no more there. They have lost their position. And for multiple reasons. In some cases, governance is the issue. In some cases, business model is an issue. In some cases, very high ambition is the issue. And also the exposure to unsecured loans. So those are the factors which some of the relatively smaller players which are doing pretty well as far as the investors are concerned, they are getting excited about it. I think they are no more there. I'm not naming any bank. So from the investor's point of view, I think post-COVID.
Right. And overall, with all of this said,
sorry, yeah, carry on.
Yeah, go on. Go on.
From the investor's point of view, post-COVID, I think at best, half a dozen banks they are in their universe where they are willing to put in money. And some of the very promising banks a few years back are no more there. They have been dethroned for multiple reasons. That's what I said.
Right. So overall, what's the kind of impact you're seeing on the Indian rupee and the bond yields?
The bond yield is, as you have seen, the 10-year yield is now settling down. There will be rate hike, and it has to go up. I mean, there's no, but there'll be sudden spike, because what happened in the quarter is this: the market was not prepared that RBI will advance the hike and go for an off-cycle hike. So that actually was taken the market by surprise. But as you have noticed, Reserve Bank of India governor in his recent speech in Delhi spoke about soft landing. So I would like to believe whether it's 25 basis point or 50 basis point is likely to happen. It will be in a systematic way if RBI sticks to the vocabulary of the governor and deputy governors. So market is prepared for a rate hike, and it will be in phases. I think last week there is an agency I read there. They spoke about again yet another up-cycle hike. So I would like to believe that there is no more up-cycle hike. The RBI will stick to MPC meetings, barring unforeseen circumstances and something which is suddenly crops up, which we were not prepared for. So it will very systematically, RBI will in phases will hike the rates. So there will be no jerk. Yes, 10-year will rise. About the rupee, I don't know about our obsession about 80. I mean, what's the big deal about 80? Why not 79 or why not 81? So that I don't understand what's so sacrosanct about 80. Other part is this: the barring Russian ruble, every currency is losing its value vis-a-vis dollar, because the dollar index is going up, and some of them, including pound sterling, have actually lost much more than rupee. So it's a scenario, not a very happy scene as far as we are concerned, because we have a current account deficit, and we are not an export-driven economy. If you see if the local currency depreciates, it's good for those economies which are export-driven. But in our case, we are import, and about 20% or 27% of what import is oil. So a lot of things depends on the oil. So we need a currency. We need to stem the currency depreciation. But I don't know the logic behind our obsession about the particular 80 number. I think the only way to do it, Reserve Bank of India has already started taking steps. One of them is doing business, I think the invoicing in rupee. that supports more aiming at the Russian oil trade. Probably it will extend to Iran also. So that will the first stage, and the second, it has also raised the ECB limits, etc. Historically, if you see what we have done in the past with raising money overseas through FCNR bonds, raising through FCNR deposits or through bonds, etc., India Millennium Bond, India Development Bond. There are many ways we have done it. But I think this time, apart from what Reserve Bank of India has done, it is left with no other choice but to hike the rates. Hike the rates to contain inflation as well as to contain rupee depreciation. Because the wider the differential between the interest rates, I mean, the chances of people getting excited about putting in money in India is less. So we can't be a laggard. So when everybody else is raising rates, we have to raise rates. That's one of the ways, or that's the only way I would like to believe, apart from others, whatever Reserve Bank of India is doing, is to stem the depreciation of rupee. Because yes, we have heaps of foreign currency, foreign exchange reserves. I think we are fifth or fourth in terms of globally.
Globally, correct.
But some part of it, I don't remember. I think at least 1/3 of it, if not more, is 1 year money, 1 year short-term debt. Of course, it's only the government debt is very little. It's only the most of it. I think 75% of it is corporate debt. But if you know the interest rate, if the future of rupee is like that, rupee will start sliding and will slide more. Then what was happening historically? These corporations, these corporations, they were keeping their position unhedged, and B typically was rolling over. So 1 year it's good rolled over. But if the rupee future is not that bright, if the rollover stops, in that case there'll be a huge depletion in the foreign exchange reserve, as I said. So it is we need to do something on the rupee. Right. Other part is this, Hiral, is this, we are talking about huge rupee depreciation, and I mean huge depletion in our foreign exchange reserve. Remember that this depletion is not only on rupee. This is because of the other currencies which are in our basket. They are losing value vis-a-vis dollar. So it's a secret. We don't expose, the Reserve Bank of India does not talk about what's the component of dollar and what's the component of other currencies. But I would like to believe roughly, if you see our foreign exchange reserve, probably 60% odd or little more will be dollar, and the rest of it other currencies. Now, when the other currencies are losing value vis-a-vis dollar, then there will be depreciation. And that's what we have seen, that with a 15-month low, the foreign exchange reserve has come down. So it's wrong to say that it's because of rupee depreciating, our foreign currency reserves is going away because the Reserve Bank of India support and selling dollar. That's one of the factors. But other factor is, which is equally important, is other global currencies losing value against dollar. When dollar index is going up every day, and every currency in the world, barring one, is losing its value, rupee is no exception. In fact, rupee's loss is relatively lesser than some of the other currencies. But that does not mean that we remain complacent and we don't do anything. We need to do things which RBI has been doing. And one of the things we can't afford not to do is raising rate to contain inflation as well as rupee. And it's interlinked, because even if rupee depreciates, your import bill goes up, and then imported inflation hits you. So in the both ways, RBI does not have any choice but to raise rates. From 4.9, where would it go? I would like to believe 50 basis point in August. And then as we move forward, it could be multiples of 25 basis points, or yet another 50 basis point. I don't know.
Absolutely. And I think that's something we need to wait and watch as well. And I think we are in a much better space as well versus the other economies. And that's something which is really good, but whether it is in our favor or not is something we need to wait and watch. Thank you, Tamal, so much for joining us on the show. Always a pleasure to speak to you. Thank you. Stay safe and speak to you soon again.
Thank you, Hiral. Thank you. Thank you. Chalo, you got what you wanted?
Absolutely.
ठीक है, चलो.
Thank you.
Don't prepare anything जो मन में आता है बोल दिया आपको, चलो.
No, perfect. That's what it should be.
Yeah, if you need any editing, etc., you are welcome.
Yes.
Okay.
Thank you so much.
Okay. Chalo. Thanks. Bye.
Thanks. Bye.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.